Property prices, the RBA, and interest rates. What's going to happen with the economy moving into 2023, and how can you get the best deal on your mortgage at this point in time? I just made a couple of phone calls and saved ourselves thousands of dollars. So I'm going to share with you how I was able to do that in today's video. But before revealing how we saved money on our own home and our investment property mortgages, what's going on in Australia's economy and what's the outlook for 2023 when it comes to the economy and it comes to the housing market? Now, where we stand at this point in time is we're in a bit of a lull. Moving in towards this Christmas period, the RBA is going to go on a shutdown soon, and the economy is sort of stabilized at this point in time. Now, the RBA is saying that inflation should peak at that 8% mark and then decline to around that 2 to 3% ballpark in around 2023. As you can see on screen here, the cash rate is sitting at around 2.85% at this point in time in November 2022. And you can see they've continued to increase interest rates at 0.5% and recently at 0.25% increments. Now, what do we think is going to happen with the cash rate and interest rates moving forward? The way I see it, similar to the big banks, some of the big banks are forecasting low 3% for the cash rate. Other banks like Westpac, ANZ are forecasting in the high 3%. I think the cash rate will land at around that 3.3 to 3.6% mark. So we probably have at least one or two 0.25% increases to go. This would land the cash rate in that 3.3 to 3.6 band range within the first few months of 2023. Now, sometimes when I hear YouTubers and people talk about Australia's economy and the property market, I personally say, who cares? Like, what's going on with that cash rate? Doesn't really affect me. I'm more interested in what the bank is charging me, what CBA, what Pepper Money, what the lenders are charging out there. And so it's important to go and review your loans. Whether you've got a owner-occupied loan, whether you've got some investment loans for investment properties, it's important to be on the pulse and keep up to date with what's happening with your interest rates. Now, there were a fair few people who were created their own luck by locking in at those super low fixed interest rates, somewhere in the 1.99% or up to 3% mark 12 to 18 months ago. We were lucky enough to be one of those people. We fixed in for a 2-year period, and our fixed interest rates will roll off in early 2024 and late 2023. We were able to lock in a large portion of our loans at around that 2.7 to 2.8% ballpark, and then those loans will roll off those fixed interest rates to much higher rates in 2023 and early 2024. Now, there's a lot of people who have already come off their fixed interest rates and are going from 2 to 6%, which is quite a large jump in tripling your interest repayments from where you were seeing them at historic lows. Now, I think we've had it pretty good when it comes to interest rates, and moving back to this normalized market seems more reasonable to me. So with the cash rate sitting around that 3 to 3.3% mark, you'd expect that the banks will be passing on around a 2 to 3% buffer. What this means is once the cash rate settles in what I think is around that 3 to 3.5% mark, you should see interest rates around 5.5 to 6.5% for the everyday homeowner and the everyday investment property. Now, of course, this is different if you're looking at higher risk assets or you've got a larger portfolio. You're able to create economies of scale or negotiate deals. The way I see it is that the average Aussie is going to be paying around that 5.5 to 6% mark in terms of their interest rate on a variable loan in early 2023. Now, this is where the exciting part comes in. I'm excited anyway. We were able to save 0.66% on our own home loan by making a phone call. Now, people get lazy. People don't want to pick up the phone and have a chat to the bank and listen to the hotel music sitting on the line waiting for someone to get back to you. But I really don't mind doing this. I enjoy sitting on the phone because you're going to save money. You can just ask the question. And so a big takeaway you should get from this video is please pick up the phone and have a chat to your broker or your bank. Now, I deal directly with the banks that we've worked with. We don't generally deal with brokers unless we're looking at a more commercial or higher risk deal like the flip deals we're looking at the moment. But for our personal buy and hold portfolio, I've dealt directly with the banks, and CBA is one of the banks that we lend with. Now, I picked up the phone and we were on a 5.4% variable interest rate for our own home. I went on to Property Chat, had a read on some of the forums, seeing what other discounts people were getting at this point in time, and I knew we could get a rate in somewhere in the high 4% mark by negotiating with the bank. Now, the bank asks you a few questions, and one of those questions is about whether you've had a chat with them in the last 6 months. So if you haven't had a chat with the bank in the last 6 months, definitely pick up the phone and give them a call and ask the question if they can give you a better rate. Now, I indicated to the retention team on the other end of the phone line that I could get a better rate in the high 4%, and I knew that based on the property chat forums. After having a chat and waiting on the phone a little bit, they offered me a 0.66% discount, which is over 0.5%, and that led our rate to be 4.74% with just the click of a button. I also called up Pepper Money. They have one of our loans for our unit block purchase, which if you haven't seen, you can go back and check out the videos on our unit block purchase, breaking down the numbers and breaking down our strategy with that property purchase. And so that's slightly higher risk property because it's a whole unit block in Coffs Harbour. And so we were able to negotiate the rate down from 7.3% down to 7%, which is a 0.3% saving. Now you might go, Luke, why are you even paying 7%? That's a ridiculous rate. But for me, the way I assess our portfolio as a whole is on the weighted average interest rate. So I look at the debt attached to a property, I look at the interest rate, and I multiply that across all our loans to get a weighted average interest rate and assess the average interest rate that we're paying across our entire portfolio. It's important to assess each property for their merit based on the interest rate you're paying. So our Coffs Harbour purchase, for example, at 7% variable interest rate at this point in time, and your portfolio as a whole. So you need to weigh them up individually and holistically to get a clear picture. Now for us, the real reason we're happy paying that rate at Coffs Harbour is we will look to renegotiate down the track, but we're going to add value to that property. We're in a hold phase at the moment. We've only held that property for about 12 months and we want to hold it for 15 years. And we want to go down there and renovate each of the units at a period in time. So when you're looking at your own property portfolio or you're looking at your own home, look at what rate you're paying, look at your investment loans as well, pick up the phone, have a chat with the bank, look at what other rates people might be able to get and negotiate. It's as simple as just asking the question. Now, I'm not one of those people that think the property market can go on forever in a short-term boom, but I am bullish on property over a long period of time. When we're talking 5, 10, 15 years plus, I'm very bullish on the Brisbane market, obviously being a Brisbane buyer's agent. And so my wife, Emily, and I have around about $3.5 million of assets in the Brisbane market. We also have about 1.5 to 1.7 mil in the Coffs Harbour market in value there in property. So it's important to understand your cash flow in the short term, what's going on with the RBA, what's going on with the economy, what's happening with my variable and fixed interest rates, but also step back and take that big picture view and look at how you're building your portfolio over time, because you're not doing all this hard work and signing these loan documents and buying these houses for no reason. There's got to be a reason behind it, which for us is creating financial freedom. Choosing what we do with our time, who we spend our time with, where I can put my efforts in terms of business, renovations, charities. It's important to keep that end goal in mind. So to wrap this all up, when do I think the interest rates will stop rising? I think in about March, April 2023, we'll see the RBA stop or take a pause on increasing interest rates. I think as long as they get a handle on inflation and they're comfortable that inflation is coming into a reasonable band, they'll pull back on increasing interest rates. Of course, they could keep going, but I can't see them wanting to tank the economy too much. They've got to try and walk this fine line in finding a balance between increasing interest rates, but also getting a handle on inflation while not tanking the economy or the markets. At a personal level, I think you need to pick up the phone, negotiate everything when it comes to your loans. Look at other lenders, have a chat with a few mortgage brokers, call your bank and just ask for a discount. Also have a look at the property chat forums or other forums out there that can give you an idea of what others are paying and put in a little bit of work to get the best rate for your own home or your investment property. To me, there's always opportunities in the market. I shared in a recent video that we're looking at a flip project, and I still think even if the market's softening, that there's always an opportunity out there if you can buy for the right price and if you can finance the property in a way that makes sense and the numbers stack up. I'll always try and be as transparent as possible on the YouTube channel. Emily and I have always been of the opinion that if we can't share the numbers and be open and transparent with our property portfolio, how can we expect our clients and other people want to share their information with us when we have chats? So I'm pretty much an open book, so I'd love to hear from you down in the comments below. Let me know what you think is going on with the economy, the property market and interest rates, and what are you going to do to get yourself the best deal? If you could drop a like on this video and subscribe to the channel down below, that would really help me out, and click this video over here for more things real estate, renovating and financial freedom. I'll see you in the next one. Peace. It's exciting to me saving money on home loans. You know, my background as an accountant never leaves me.